This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Crunch time. The tax bill is done. Now lawmakers have just days to avert a shutdown.
Sales surge. Americans purchased homes at the fastest pace in more than a decade. But will the tax bill tap the brakes on housing?
Retirement overhaul. As we ring in the new year, members of the military will see the biggest shift to their benefits in decades. Those stories and much more tonight on Nightly Business Report for this Wednesday, December the 20th. Good evening, everybody. I'm Bill Griffith, and tonight for Tyler Matheson, coming to you once again from the New York Stock Exchange. Hi, Sue.
Hi, Bill. Good to see you. I'm Sue Herrera. Welcome, everybody. Congress approved the most sweeping overhaul of the U.S. tax code in decades, altering the finances for businesses big and small and households across America. The rewrite is the biggest legislative achievement for Republicans since they gained control of the White House and both chambers of Congress. The Senate passed the measure overnight. The House passed it again after a snag that we told you about yesterday forced another vote today. And the president declared victory.
It's been an amazing experience, I have to tell you. Hasn't been done in 34 years, but actually really hasn't been done because we broke every record. It's the largest, I always say the most massive, but it's the largest tax cut in the history of our country, and reform, but tax cut.
The president hasn't signed the bill into law quite yet, and he may wait until January. The timing depends on the outcome of separate talks about government spending.
Speaking of which, agreeing to a spending bill is the next legislative challenge, and lawmakers only have a few days to do it or risk a government shutdown. Kayla Tausche is following this story for us from Capitol Hill. Kayla, good evening. Where do things stand tonight?
Well, tonight, Bill, House Republicans are meeting to hash out exactly what their plan is to move forward. The self-imposed deadline of tax reform put them on a collision course with very real deadlines to fund the government by the end of this week. Now they're having to throw out any expectations that this year-end spending bill would include comprehensive Republican priorities, and instead they're going to put forward a streamlined package just to keep the government's lights on for about a month.
What are some of the sticking points, Kayla, that you've heard about?
Well, Sue, some of the most contentious sticking points at this point have been withdrawn because they're just trying to put something on the table that they can pass. Republicans had originally wanted to fund defense through September. 44 Senate Democrats said that would be dead on arrival. Today, 2 Senate Republicans said they would withdraw some controversial health care measures that would have put forward a roadblock in the House. So this is going to be a fairly straightforward bill, though it will seek to, on a short-term basis, reauthorize children's health insurance and potentially even tackle some disaster relief spending, though aides tell me that will likely take until next year to pass.
The big question, how does this get resolved? In fact, does it get resolved anytime soon?
They are not expecting a government shutdown. If you ask any lawmaker here on Capitol Hill, they say there will not be a shutdown before Christmas. No one wants to be responsible for being the Grinch. Tonight, House Republicans will put forward a plan that they believe has consensus. They'll discuss it with their Senate colleagues, and barring any opposition from either chamber, they hope to vote as early as tomorrow. Remember, lawmakers are people too. They want to get home for the holidays.
Just like you do, I know. Another late night for Kayla Tausche in Washington for us tonight. Thanks, Kayla.
Sure.
Well, now that Congress has approved the tax legislation, a number of companies are outlining how they will deploy some of their capital. For example, AT&T plans to invest an additional $1 billion in the U.S. next year. It will also pay a special $1,000 bonus to more than 200,000 employees. Boeing says it's still studying the provisions of the new tax legislation, but following its passage, it plans to earmark $300 million on workforce-related and charitable investments.
We also heard from some banks. Wells Fargo and Fifth Third said they both plan to raise their minimum hourly rate. Wells Fargo is also going to target $400 million in 2018 philanthropic contributions. Fifth Third is going to distribute a one-time bonus for more than 13,000 of its employees.
To housing now, and the housing market, which finished the year on a strong note. Sales of previously owned homes rose in November by the strongest pace in more than a decade. Almost all regions saw growth, despite the supply of homes on the market being at the lowest level since 1999.
But following the passage of this tax bill, some prospective homeowners are concerned about what is to come. And as we've been reporting, the tax bill does cut deductions for both mortgage interest and property taxes. While the specific cuts will not hit the vast majority of current homeowners, raising the standard deduction would cause many to stop itemizing altogether. And that takes away incentives for home ownership. And as Diane Olick reports for us, some worry that it could actually cause both sales and prices to fall.
The Curtis family has been house hunting for over a year, hoping to find more living space in the Chicago suburbs. It has not been easy.
Sometimes you see a home, you really like it, and then it's off the market within 72 hours or so. You look, it's like, oh, it's gone again.
Stiff competition, high prices, tight supply. It's the same story across the nation. And now buyers have one more worry: taxes.
Oh, it's definitely a concern. Anytime you don't get an opportunity to have that extra deduction, or that possibly getting that money back during that spring season, can be a little bit of a a little tight squeeze on your budget.
The tax bill cuts the cap on the mortgage deduction to interest paid on $750,000 in debt. That's down from $1 million. But 94% of homeowners currently have mortgages below the new cap, and current homeowners are grandfathered into $1 million. The deduction on property taxes is still there, but now capped at $10,000 in taxes paid. 95% of homeowners pay less than that, so it wouldn't affect them, according to the realtors. Certain states, though, will be hard hit. In New Jersey, 30% of homeowners pay more than $10,000 in property taxes, 20% do in New York, and 9% in Illinois. In areas like River Forest, just outside Chicago, that will be felt.
Out of the 45 on the market, 41 of them are taxed. They have property taxes in excess of $10,000, so between $10,000 and $63,000. So if you're going to cap those at 10, that's going to have a huge impact in terms of incentives.
Also, with a higher standard deduction, fewer people will itemize overall, leaving no tax incentives to become a homeowner. So the rent versus buy equation could tip more toward renting, especially with home prices still soaring. On the other hand, it could help buyers.
We have to wait and see whether this impacts home ownership rate over the long haul. But in the meantime, it's a tax cut for many Americans.
A savings which they could use for a down payment on a home. For Nightly Business Report, I'm Diana Olick in Washington.
On Wall Street today, the markets were pretty calm. Stocks were little changed, but remain near record levels after Congress passed the tax bill. The Dow Jones Industrial Average fell 28 points to 24,726. The NASDAQ and the S&P 500 were both off about 2. Stocks have climbed this year in part because of the expectation of tax cuts. And now that they're here, there seems to be a debate happening among investors. Bob Pisani explains.
With the tax bill almost a done deal, now the debate shifts to whether to sell on the news. It may be happening already. Stocks retreated on Tuesday and were little changed on Wednesday. Even a big move up in 10-year Treasury yields failed to move bank stocks up. So there's three options here. First, the market pauses and stocks sell off on the news of the tax cut, or the rally continues, or the market rotates. Many are arguing that the rally this month should pause. Bears say the market's overbought and it's expensive, even considering the tax cuts. Most analysts believe the S&P 500 earnings for 2018 will increase anywhere from 8 to 11% without tax cuts. But tax cuts could add another 5 to 7% to that. And bears say much of that's already priced into the market. Bulls say the global economic expansion, coupled with low rates, will continue to justify the rally. That there's still too many positive catalysts to see a big pullback right now. But there's a third option, a middle ground between the rally keeps going and sell on the news. That's whether the market can successfully continue the sector rotation it's been seeing in the past month. Banks, a sector that would greatly benefit from tax cuts, for example, are up almost 7%. While technology and particularly semiconductors have underperformed, they would be less likely beneficiaries. So remember, There's a sector that would see fewer benefits from tax cuts, and there are sectors that will see greater benefits. So who wins? If you continue to believe that global growth will go on and rates will stay low, it's not that hard to make an argument that the market will at least hold its gains going into 2018. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Last week, we reported that the FCC had voted to change the rules that govern the internet. Well, now it appears as if that battle is not over just yet. Our Julia Borston takes a look now at how this issue is unifying both Democrats and Republicans.
The chair votes aye. The item is adopted.
The backlash is growing following the FCC's vote to overhaul net neutrality regulations, rules that prevented internet providers from prioritizing or slowing different content on their pipes. Dissenting FCC Commissioner Mignon Clyburn and Senator Maria Cantwell hosted a town hall on Twitter, fielding questions about why they believe it's so important to preserve the protections implemented by the Obama administration, warning that startups and consumers could bear higher costs.
Internet service providers today, they produce and own content. They even own media companies. So they have incentives. They have incentives in place to favor their own traffic, to favor their own content, to favor their own business interests.
And yesterday, House Republican Marsha Blackburn introduced a solution to the FCC's vote. Her Open Internet Preservation Act prevents blocking and throttling of internet content, but would not block internet providers from charging companies to prioritize their content. Fellow House Republican Mike Kaufman also speaking out about the dangers of repealing the regulations. And there's a legal battle brewing. New York Attorney General Eric Schneiderman saying he will file suit to block the FCC's plan, saying it enables internet providers to favor certain viewpoints and leaves consumers with no protections, saying the FCC's public comment process was corrupted by fake comments, with 4 other state attorneys general announcing suits as well. We're even seeing a few states look at the potential to implement their own legislation to enforce net neutrality. So what does this mean for companies and consumers? New York Times tech columnist Farhad Manjoo predicts more streaming deals between internet providers such as Comcast and streaming giants like Netflix. But he says consumers won't immediately see a difference.
Biggest harms are going to sort of be invisible. Like, we will not see the company that can't afford to pay for this stuff, the kind of new interesting video startup or maybe VR startup or some other, high bandwidth application that needs to pay for fast lanes on your home internet. They may not be able to do that, and then you just wouldn't see that success.
As for whether the FCC's net neutrality repeal stands, Manjoo says while Congress figures out its position, expect the FCC rule to be the new normal until Democrats control the FCC again. For Nightly Business Report, I'm Julia Borston in San Francisco.
Still ahead tonight, Las Vegas is betting on a makeover.
In a town known for its gambling, it's the ice that's changing the face of this desert city. I'm Contessa Brewer. Coming up, how Sin City is quickly becoming Sports City.
It goes without saying that more Americans are buying more items online, in part because it's convenient and easy. I mean, after all, you just click, and then a few days later, your package is delivered. But it's the shipping process that's actually more complicated than that. Courtney Reagan goes behind the scenes for us tonight in Walton, Kentucky.
It's the final push for retailers to get packages shipped in time for Christmas. And if you're one of the 40% of Americans still shopping and squeaking in last-minute online orders, your package may be coming from one of these Radial fulfillment centers. Radial is an e-commerce technology and distribution provider for hundreds of retailers and brands, including Adidas, Neiman Marcus, Levi's, and Kate Spade. It's the second largest U.S. fulfillment center by square footage behind Amazon, with 21 locations throughout the country. Some orders placed on Amazon.com are fulfilled by Radial. Amazon sellers can use Radial's network to fulfill even Prime-eligible items instead of Amazon's fulfillment options. This northern Kentucky facility covers 1.3 million square feet, packing online orders for Aeropostale, Shoe Carnival, and others. The final hours for online ordering with delivery in time for Christmas make this one of Radial's busiest weeks of the year. And every year, the volume only gets heavier as more shopping shifts online. This week, Radial expects to ship more than 2.5 times the number of packages it shipped on a record-breaking Cyber Monday. If you're checking off your holiday shopping list online, watch the shipping deadlines carefully. Here at Radial, today is the last day for ground shipping in time for Christmas.
This year was a little unique with Christmas being on a Monday, so you definitely had an earlier cutoff for ordering online than you normally do, but our retailers did a great job of kind of doing, like you said, behind the scenes upgrades for our customers. And then, really, if you want to pay for air shipping, you have up until 2 days before Christmas to order.
Simpson says many retailers have been silently picking up the cost of expedited shipping on consumers' behalf since around December 13th. But now it's on shoppers to pay for rush shipping. For Nightly Business Report, I'm Courtney Reagan in Walton, Kentucky.
BlackBerry's pivot from hardware to software continues to pay off, and that's where we begin tonight's market focus. BlackBerry reported better than expected earnings and revenue thanks to strong demand from the government and NATO for business software. The company is also looking to spend at least $500 million on deals that would help bolster its growth. The shares popped nearly 12% to $12.17. General Mills' cereal slump may be over thanks to strong sales of its new chocolate peanut butter Cheerios. The food giant, which has been contending with soft demand for processed foods, said cereal sales improved in the latest quarter, and that helped overall revenue and profits beat estimates. The shares rose almost 2% to $58.76. The RV maker Winnebago reported profit and sales that grew at a faster clip than analysts were expecting. The company says it continues to see growth in its towables division. Winnebago also cited improved margins thanks to an expanded product lineup. Nonetheless, shares fell more than 4% to $54.75. Bill?
I'm still thinking about those chocolate peanut butter Cheerios.
I know, they sound delicious.
Investors got their first chance to react to Micron's strong earnings report and upbeat outlook. Company, which released results late yesterday, said that the growth of artificial intelligence will likely increase demand for its products.
We are barely seeing the tip of the iceberg in terms of artificial intelligence impacting our lives. And as artificial intelligence goes into all verticals and processes a lot of data, it actually is going to drive a lot of growth for solid-state drives in data center applications too, where we see biggest growth coming in from the data centers.
Shares of Micron higher by 4% today to $45.75. And after the bell, Bed Bath & Beyond reported earnings and revenue that edged past expectations. Same-store sales, though, fell fractionally. Shares initially popped in after-hour trading tonight and then sell lower. They ended the regular session up 2.5% to $24.57.
You probably know that Las Vegas was built on gambling, but now it wants to add to that reputation and become a city built on sports. Contessa Brewer looks at how Sin City is reinventing itself.
In a town famous for flashing lights and clanging coins, these cheers are quickly becoming a Las Vegas mainstay.
It's loud, it's raucous, we're all cheering for the Knights.
And in this desert city, the ice is a big draw.
Big Golden Knights fan, Vegas resident for 15 years. So excited that they're here.
The Golden Knights have exploded onto the National Hockey League, tied for first in their division. The arena where the Knights play is filled, both with locals and visiting fans.
We're sold out, so before the game, there are people. They're going to restaurants, they're going to bars, they're coming here, they're buying food, they're buying drink, they're spending their money, there's Uber, it's taxis. So we are creating a lot of business momentum for Las Vegas by being this hometown team.
Shovels into the ground and
the Raiders broke ground on the stadium where they'll play pro football starting in 2020. Soccer's launching an expansion team. The Las Vegas Lights start playing next year. And now companies with global gambling dominance are betting big. They'll hit the jackpot with sports. MGM owns a big stake in the arena where the Golden Knights play. and just bought the WNBA's worst performing team, now named the Las Vegas Aces. Though other WNBA teams are struggling to make a profit, MGM CEO Jim Murren is prepared to ante up.
It's about empowering athletes. It's about bringing live entertainment. And I am very optimistic about the future of the WNBA, particularly in a market that is so entertainment focused as Las Vegas is.
Murren says 65% of MGM's revenue now comes from non-gaming sources. But sports is about more than the business bottom line.
It makes it a hometown, you know, with being a transient city, it's hard to see that camaraderie come to life.
And they say sports may change that. It gives us something to come together and rally behind. They also say that about October 1st, that what happened at Mandalay Bay on October 1st was a rallying call for Las Vegas.
I was excited about this long before that tragic date. We had already acquired the team before that point, but it certainly feels good that we're going to be able to bring another opportunity to bring the community together.
This community depends on visitors, with 150,000 hotel rooms to fill every day. Las Vegas is betting sports fans will travel here to see their favorite teams play. Sports isn't new to Las Vegas, of course. It has a long history with golf and tennis, rodeo and bull riding, NASCAR, and at the top of the ticket, boxing. But for decades, major leagues and gaming's governing bodies have resisted putting sports teams here, worried about the crossover between sports gambling and sports. But that's starting to change as the nation moves toward widespread acceptance of gambling.
It really is a new product for us to put out to the public. We know people are going to come in to see that.
A product that's turning Sin City into Sports City. Contessa Brewer, Nightly Business Report, Las Vegas.
And coming up, members of the military are being offered new choices that could affect their financial future.
Yet another major setback for Uber. The European Union's highest court ruled that the fast-growing ride-hailing company is a transportation business, not just a platform that connects drivers with riders. That decision will force Uber to comply with the region's transportation rules, and it could have implications for other companies operating in the so-called gig economy.
Some big changes are coming for members of our armed forces. Starting next year, the military is overhauling its retirement benefit system, ushering in some of the biggest structural changes in 70 years. Sharon Epperson has our story tonight.
23-year-old Zach Beckman is a government contractor in the private sector and a reservist in the United States Marine Corps. Military service runs in the family.
I wanted to be a Marine ever since I was a little kid. It was almost like my first big dream. My dad was a Marine, my grandfather was a Marine.
Now, Corporal Beckman is being offered a choice for his financial future they never had.
The old system, you basically had to stay in 20 years before you could get any type of retirement plan.
Under its current retirement plan, military members receive a lifetime pension that's equal to 50% of their base pay. To earn it, they must serve at least 20 years. Many aim to hit that target, but only 19% reach it. The majority leave the service with nothing.
Today, people move from job to job, and they need a benefit, a retirement benefit that they can take with them.
Starting January 1st, service members entering the military will be part of the new blended retirement system. It combines a pension and something like a 401k plan, putting more of the responsibility for long-term savings on the members' shoulders.
It starts to cause them to learn how to contribute to their own future, their own retirement.
Those with at least 12 years of service will stay on the legacy program. But 1.6 million who joined after 2006, including Corporal Beckman, will need to choose which plan they want.
If you know for a fact that you are going to serve 20 years, then you should stay with the legacy system.
There is still a pension under the new system as long as you reach 20 years, but the amount is reduced by 20%. The Department of Defense says members are encouraged to make up the difference using the federal government's Thrift Savings Plan, or TSP. Those who opt in will select how much money they'll contribute to the TSP and can begin receiving government matching contributions of up to 5% of their pay right away.
It is my strong belief if they get the education and they start right away contributing, they won't miss the money.
The reason that Congress passed the law and the Department...
The military is requiring mandatory financial education training on bases and online. So far, over 80% of those who must make a decision have taken it. Some financial advisors worry one course may not be enough.
This all has to start in the boot camps. This has to be fully integrated into training. Just as much as they teach you how to shoot a gun, they need to teach you how to manage your paycheck.
Pentagon officials say access to a portable retirement benefit early in their career will make military service more competitive.
The blended retirement system, we think it's a key step in recruiting and retaining the talent we need to ensure military readiness.
This Marine reservist says his choice is clear.
Getting my civilian job and also having my Marine Corps experience, I know the value of $1 and see that it's important to save up for the future.
But for others, choosing the best path for their retirement savings may not be as easy. For Nightly Business Report, I'm Sharon Epperson.
And finally tonight, a gold bar was recently placed among dollar bills and coins in an Idaho Salvation Army kettle. The 1-ounce bar is worth more than $1,200. The Salvation Army plans to trade it in for cash. And as we told you yesterday, a $200,000 check was also recently donated to the organization. Such a nice story to end on, right, Bill?
Keep the donations coming.
Absolutely.
Keep them coming.
Absolutely. On that note, that does it for us tonight. I'm Sue Herrera. Thanks so much for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.